Hey everyone, welcome back to the channel. Today, we're going to talk about FHA loans. If you've ever heard of them or wondered what they are, or how they work, or even if it's the right fit for you, stick around. We're breaking it all down, step by step, to help you have an informed decision when it comes to buying your first home or even refinancing. Let's start with the basics. What exactly is an FHA loan? An FHA loan stands for Federal Housing Administration Loan. It's a government-backed mortgage program that's specifically designed to help lower-income borrowers for the first-time home buyer to get into a home with less financial burden up front. Unlike conventional loans, which are issued by private lenders and not backed by government, FHA loans are insured by FHA. The whole idea behind this is to reduce risk for lenders, making it easy for them to offer loans who may not have perfect credit or a larger down payment. So if someone were having trouble with 20% down, or they had some blemishes on credit, a collection, a judgment, something happened in the past, an FHA loan might be perfect for you. Now let's dive into some features that make FHA unique and why they may be a good fit for you. First off, let's talk about down payments. One of the biggest draws about FHA loan is low down payment requirement. With an FHA loan, you can buy a home with as little as 3.5% down. This means you can get a home with much less cash up front. It is a very popular way of going. For example, a $200,000 home at 3.5% down payment would be just $7,000. In contrast, if you did conventional loan at 20% down, that's 40 grand. So with an FHA loan, you're saving significant amount of money that you would otherwise put down. Next, let's talk about credit score requirements. With conventional loans, you often need credit score 620, 660, 680, 720 on certain products. However, with an FHA, you can go as low as 580. This makes FHA loans much more accessible for people who have had some financial challenges in the past. And lastly, FHA loans have competitive interest rates because they're backed by the government. These rates tend to be lower than what you get with a conventional loan, which could save you a lot of money in the long run. Let's take a look at some key advantages of going with an FHA loan. Lower down payments. As mentioned, the biggest advantage of FHA loan is you're putting down 3.5%. Number two, more lenient credit requirements. FHA is also forgiving when it comes to credit history. So if you had some hiccups on the credit in the past, FHA loan may be the perfect way to get you back on track. Number three, closing costs. FHA loans allow the seller to pay some of your closing costs. They can pay up to 6%. That is great. Number four, adjustable rates. With FHA loan, you have an option between fixed rate or adjustable rate. This gives you flexibility depending on how long you plan to stay in the home. Of course, no loan is perfect. There are a few things to keep in mind when considering an FHA loan. Mortgage insurance, MIP. One of the downsides with FHA is mortgage insurance. Since FHA loans have a small down payment requirement, the government requires mortgage insurance to protect the lender. There are two types of MIP: upfront premium, which can be rolled into the loan, and annual premium, which is added to your monthly mortgage payment. If you put down less than 10%, you'll have to pay MIP for the life of the loan. If you put down more than 10%, you'll pay MIP for 11 years. This extra cost can add up and something to factor in on your monthly payments. Loan limits. FHA has loan limits based on the county you're buying in. These limits can vary significantly depending on the location of the property. In high-cost areas, loan limits will be as high as $1 million. But in low-cost areas, it could be much, much lower. So if you're looking to buy a home with high-demand area, you might want to look at that. It's a simple Google search and see what the max loan amount is. Property requirements. FHA loans are stricter about the condition of the property you're buying. The property must meet certain standards to qualify for an FHA loan. So if you're buying a fixer-upper, you have to deal with additional inspections and repairs before you close. So who should consider an FHA loan? First-time home buyers are great options. If you're buying a home and it's your first time, you don't have a lot of savings, FHA loan is a great option. The low down payment, the lenient credit score requirements make it simple to get into home ownership. Those with less than perfect credit, if you have some bumps along the way with your credit, but still have steady income, you can afford a mortgage. An FHA loan would be a great way to go when conventional loans may not be an option. Those who don't have a large down payment. If you're ready to buy a home but don't have tens of thousands of dollars saved up, then the 3.5% down payment with FHA is a great option. In conclusion, FHA loans are fantastic options for many homebuyers. They are low down payment, flexible credit requirements, and the opportunity to buy a home without needing a huge amount of upfront money. However, it's important to consider the mortgage insurance and loan limits, as these can impact your overall affordability. If you're interested in an FHA loan or want to learn about how to work together in a specific situation, make sure you reach out here to 14 Days to Close and get all the details to start the pre-approval process. And if you found this video helpful, don't forget to like, comment, and subscribe for more home buying tips. Thanks for watching, and we'll see you next time.